What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at Tesla, ticker symbol TSLA, on a variety of time frames in anticipation of tomorrow's trading day, Thursday, January 25th. Now, Tesla today, of course, reporting earnings. A little bit of a disappointing earnings report, missing on both EPS and revenue. I think the primary story here, though, this evening is going to be that 2024 guidance. A bit of a lackluster guidance and not much real guidance at all. They did go ahead and say that in terms of vehicle volume growth, 2024, quote, may be notably lower than last year's growth. The company warning that they're perhaps in between two growth waves in a bit of a plateau. Now, I think a lot of the market, the stock could be down 16% right now, but it's not. It's down 6%. I think the market is able to look at this and understand that this is how it goes with Tesla. The investors are not here to ride this out as if it were the S&P 500. They're here for substantial potential future growth. And with that comes these periods of potential plateaus, which is why I think the stock, all things considered, is only down approximately 6% here in the after hours, which again on Tesla is not all that rough. So let's take a look at a variety of time frames and get a base case for both a bullish and potential bearish scenario here as we head into tomorrow. Before we do that, guys, this is a brand new channel. I appreciate it if you want to subscribe to the channel. It helps out tremendously. Maybe even leave a like on the video. It all helps out a lot with the YouTube algorithm, and I appreciate that. Thank you. So this 5-minute chart gives us a very good look at the after hours movement, but let's move on here to the 30-minute chart. We can see here that the 200 period moving average here on the 30-minute chart, that gray line, has actually been very well respected as a resistance the last 3 trading days. This morning in pre-market really being no exception. But on the downside, the stock was not trading right up against $200 a share. There was a buffer. We were trading really up between 206 to 208 and that 200 period, at least looking here at the 30-minute chart. Again, this is just one time frame of a variety of time frames that we're going to take a look at here. But that's an interesting, relatively tight channel for Tesla. Now, if we move ahead here to the 4-hour chart, we can get a little bit more of a picture here. We can see very clearly that since the end of 2023, really starting on the 28th of December 2023, we've been in kind of this short-term, 4-week-long-ish stair-stepping down pattern. And while this isn't the most attractive chart we're going to look at this week, right, we have to consider that change in less than a month, the stock is down 26% if you want to include today's after hours. And listen here, at the end of the day, we're talking about a massive blue chip company. I've said it for years now. Where there's value in the market, value gets recognized. So the fact, it may take some time though, the fact that Tesla's at perhaps a plateau point in the company's growth, that's nothing new for Tesla, but we also need to consider that perhaps quite a chunk of that 26% pullback that we've seen in the last 4 weeks approximately, perhaps a lot of that was pricing in the fear of this, earnings report and the guidance for 2024 not exactly being incredibly exciting. Let's look at the 2-year daily chart here and take a look at a few levels moving forward and lay out a few bullish and bearish potential patterns here as we head into tomorrow. Or more so scenarios, not patterns, right? Understand that this is the daily chart. This does not currently reflect the after hours movement. So the stock right now is right in this area, okay? We right now are testing the lows that we saw right around Halloween, kind of like on Halloween day, okay? So here's what I'm very clearly looking for moving forward. 195 to 200 is an incredibly obvious range that we have seen act as a potential area of support in the recent past, just within the last few months. Now, $200 a share, we do not need an incredibly obvious technical level to tell us that $200 a share is a psychological level that many traders, many institutions are going to have their eye on. So here's what I'm looking at. From a bullish perspective, and then I'll lay out the bearish. From a bullish perspective, 195 to 200, I think absolutely needs to get reclaimed / held, right? Since we're sitting right around 195 as we speak. Now, when I say that, I know a lot of traders start thinking, oh man, if we break down to 194.50, it's over. No, you have to understand that I'm a 3 to 5 trading day kind of guy, right? We're looking at the daily chart here. We're looking at daily chart, more macro midterm levels, okay? These are very important levels, but they are more macro midterm levels. I really, from a bullish perspective, do not mind if the stock dumps off, tests 194, tests maybe 192 even, makes its way down to 190. But what I'm really looking for into early to mid next week is that, ideally as early as tomorrow, is that Tesla makes a bit of a bounce, reclaims, 200, holds 195, and then ideally, I don't mind if it tests 200 or 195 3 or 4 times over the course of a couple of days. I would just like to see those two levels hold. It's a range, right? I'm not really looking at one or the other. I'm looking at that range. Obviously, ideally, as a bull, if you could be above the technical level of 195 and the psychological level of 200 and hold above 200 in the low 200s, that would absolutely be ideal. You're showing a respect of that range as support, which we saw right around Halloween. And especially on the higher volume that we tend to see with Tesla, look at that, 100 million shares traded a day on average. If we were to see that, that would tell me that a huge sample size, the market, has come together and agreed that, listen, the guidance for 2024, this is Tesla. We accept that. The stock has pulled back 26% in about a month, and we know what we signed up for, right? And they decide to hold 195 to 200. That would be an incredibly strong sign, I think, given the circumstances. Now, if you're bearish on Tesla right now, here's the thing. 200 has to reject. And I'm talking 3 to 5 trading days. I don't mind if it bounces up to 201, 203, right? But over that bigger course of like a week, when you're looking at the daily chart, tomorrow in a couple of days, especially like early to mid next week, you as a bear would want to see 200 starting to form that area of resistance, ideally even down below 195. So listen, to sum up those two different kind of scenarios, right? If you're a bear, you have one thing on your mind. Hold 200 as a resistance, break downside off 195. If you're a bull, you have one thing on your mind. Hold 195, break upside back through 200 and hold it. Okay? From a bearish perspective, a break downside of 195, very clearly, I think the next area that many traders are going to be looking at is that 177.50 to 180 range. And on the bullish side of things, guys, it's actually really interesting. There's kind of an open sky setup as long as this area can hold all the way up back to that 200-day moving average that's currently sitting right around 231, 232. So that's a good sign. Now, let's take a look at what the options traders are thinking for today. But first off, I just want to make you guys aware, if you are trading options on this name, implied volatility since mid-December is up a bit. It's gone up from about 42%. It's currently sitting right around 57, 58%. So if you are trading contracts that are maybe 1.5 months out or less, understand that if you bought them recently, you did pay a little extra Vega premium for those contracts. The same way if you're selling contracts, understand that comparatively speaking, and let's say the intended time frame of that trade is a month, 6 weeks or less, you received a little bit of extra Vega pump in those contracts. When, if you're selling contracts, that's a good thing. If you're buying, that's a little bit of additional risk. It's not the end of the world, but just understand it's a little bit of additional IV crush risk. But always compare IV to itself. You can't compare IV to other stocks. You have to compare it to its historical self, and you have to be contextual with it and compare it to the same time frame as your intended trade time frame. Okay, so let's finish up here by taking a look at the options chain here today on Tesla. A good sample size here today, 1.869 million contracts traded, 1.011 million of those are calls, 857,000 of those are puts. Now, if we look at the 0 to 20 delta range, look here, 457,700 calls, 411,300 puts. That's really evenly weighted. So we're seeing slightly bullish weighting on both the overall call put ratio and the short-term speculation, that 0 to 20 delta range, right? But it's not overwhelmingly so. This chain, I would say, somewhat indecisive, but if I had to give you an answer, it is slightly weighted to the bullish side. If you get value out of these videos, please subscribe to the channel. It helps out a lot, and I'll see you in the next one.